Welcome to the India Fintech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India. Hi everyone, welcome to the latest episode of India Fintech Diaries. I'm your co-host Elroy, and this is a show where we discuss the latest trends in Indian fintech, speak to some amazing guests from the industry, and dive deep into specific fintech themes.
And I'm your co host Hemant. In today's episode, we continue our discussion on BNPL. And to help us understand this exciting space, today we have with us Gaurav Hinduja, co founder of Capital Float, India's leading BNPL and credit platform. Welcome to India FinTech Diaries, Gaurav.
Thank you, Hemant and Elroy. Pleasure to be here.
Thanks, Gaurav, for joining us. Gaurav, Capital Float has had quite a run, starting as one of the earliest SME lending fintech to becoming one of the largest SME lender, and then to foraying into personal finance space and becoming a leading player in that as well. We are really curious to know and understand your own personal journey and that of Capital Float.
Sure, Hemant. So, like you said, we started Capital Float in early 2014, even before fintech was a buzzword. The theme that we really started out with was really how do you use technology to enable SMEs to actually be able to access capital in a much more easy, efficient, and cost effective manner. And when we started out, India was at an inflection point. We had the Aadhaar just kind of being launched. We had a new government in place that was very progressive, and we had a whole host of kind of data and infrastructure platforms that would allow financial services to be delivered in a seamless and technology efficient manner. And as we looked at the entire ecosystem, we saw that there were millions of SMEs, most of whom did not have any formal access to finance, and actually they had to rely on offline money lenders who, as you know, would charge exorbitant rates and sometimes even kind of give you a whack on the legs if you didn't repay them. But at the same time, they would provide an essential service of being able to deliver capital within a day to the SMEs. And so we said, why not look at that model of speed and delivery of execution and build that through technology through a formal financial institution? And so that's what we started doing in 2014, when we acquired an NBFC and started lending to actually sellers on e-commerce platforms on Amazon, Flipkart, and Snapdeal. As you know, that was the time a lot of these platforms were growing as well, and their sellers needed capital, and so that was really the birth of Capital Float. From there on, for the first 4 or 5 years, we really focused on the SME business, grew that to almost a 1,500 crore book, served almost 100,000 SMEs over the last 4 to 5 years. And in that journey, as we underwrote SMEs, what we realized was actually as part of underwriting SMEs, we would end up underwriting the promoter of the SME as well, because the credit profile of the business was very linked to the credit profile of the promoter who ran the business. And through that, I think we became good at underwriting people and essentially consumers. And about 3 years ago, forayed into the personal finance space with our BNPL product. And the first partner that we piloted that with was Amazon. And since then, have actually been growing our BNPL product, and we have seen massive growth over the last 18 months during COVID and BNPL, where that today is actually the biggest product that we kind of cater to and finance. So it's been an interesting journey from SME to consumer finance and BNPL. And we are super excited as to where this product is headed and what the future holds for it.
Absolutely, Gaurav. That sounds like one hell of a journey. Now let's move towards Gaurav, the focus for today, BNPL, because you also spoke about this. This is the largest segment that you now have.
Yeah.
Now, Gaurav, BNPL has been the talk of the fintech town for quite some time now, and I hear that it has, of course, emerged as one of the fastest growing segment for Capital Float as well. Now, when we look at the market, Gaurav, what we have seen is there are two narratives to BNPL. One is of convenience, the other is of instant credit. So, what's your own narrative for BNPL?
So actually, funnily enough, I think it's both. So today we've got about 2.5 million customers. 50% of them have a credit card and 50% don't have a credit card. Clearly, the folks who have a credit card don't use this as a credit product, right? They like it for the convenience because it offers features like a true one-click checkout. There is no OTP, no two-factor authentication. The fees are kind of lesser when compared to a credit card rollover fees. Instant refunds on cancellations, which credit cards don't offer, where they typically take 7 8 days. So the features of BNPL for credit card holders actually make it a very easy, convenient play. Whereas for the other 50% of our consumers, like I said, they don't have a credit card. So they are actually looking for a seamless, efficient credit line that they could use for their online purchases. And while they like the convenience, I think the primary use case for them is credit and the aspirations that having access to a credit line can actually bring to them through online consumption.
Understood, Gaurav. Gaurav, you mentioned earlier that one of the first partners that you start your BNPL journey with was with Amazon. And I was actually reading an article last month that said you've crossed over INR 20 billion in terms of lifetime dispersals on your BNPL products across the various products.
Yeah.
So help us understand a little bit about how you built an offering like the Amazon Pay Later offering. And more
Yes.
importantly, what has really helped you scale it so rapidly?
Yeah, so the 20 billion, like I said, that's roughly 2000 crores, has been built over the last 3 years across various partners, Amazon obviously being one of the largest. I think along with e-commerce, we also do work in edtech partners. We also work in travel, work with partners like Make My Trip, and now
Yeah.
have a few thousand merchants that we've onboarded on the e-commerce, vertical e-commerce side. But to your question on how Amazon kind of scaled and why that product is a marquee product, I think it is simple, right? One is obviously because Amazon itself is a destination where you can purchase anything and everything, right? And so
Right.
that is an amazing kind of partner to have because everyone's needs can kind of be fulfilled from there. The second, obviously, because the level of partnership that we have, Amazon and Capital Float have been able to uniquely develop a product that I think obviously today is the best in the market because in under 5 seconds we are able to tell a customer while they are shopping and checking out on Amazon that hey, you are approved for a line of credit anywhere from 5,000 to about 40,000 rupees, and you
Yeah.
can use this as a one-click purchase. Today, there is no online platform or no physical platform for that matter, also that can tell a customer that they can get a line of credit in under 5 seconds, right? And the
Yeah.
third is because we've been able to manage risk and collections. And sometimes people forget that this is a lending program as much as it is a payments program, right? You have to manage risk, you have to manage collections and keep your NPAs low. Because of that, we've seen a lot of capital pour in from banks to us for this program. And that's really helped us scale the program to millions of customers and allow them to purchase as much as they do today on a lot of these platforms.
That's interesting, Gaurav. I had a follow up question on your experience in launching Amazon Pay Later. While partners like Amazon definitely help you scale in size, it's also important that technology components also scale to meet the increase in transaction demand. So I'm just curious, what are some of the various components that are typically important to build a scalable BNPL solution with market leading user experience?
Yeah, sure. So, the way we do BNPL is as we are an NBFC and completely regulated.
Yeah,
The most important aspect is how do you do this in a compliant manner, right? And for that, obviously, like I said, this is a loan, even though it's a very small ticket size. And for any loan in the country, as you know, you got to do KYC.
correct.
The first step for us in our BNPL journey is KYC, and we are the only fintech or NBFC in the country today that can access the Aadhaar eKYC stack. As you know, it's only for banks today, but because of a
Right.
unique co-origination model that we have with the bank or the backend, we are able to actually use the eKYC stack of Aadhaar to make the onboarding process very seamless and efficient for the customer, right? And so that's the first technology challenge that we were able to solve almost 15 to 18 months ago. That just by entering two fields, your date of birth and your Aadhaar card, you are now not only kind of approved from a loan perspective, from a credit perspective, but also kind of you have checked all regulatory compliances from an eKYC stand of from a KYC point of view. So no paperwork, no in-person visit, nothing of that sort. And I
Right.
think that is the most critical challenge in solving the first technology step when it comes to onboarding on BNPL. The second is around credit, right? And really, how do you underwrite the credit? And now these are interesting three or four data sources that we crunch in real time, whether that's from the bureau, whether that is our own in-house income estimation model that we get from our app Walnut that has millions of data points on customers, and certain scores that we get from partners, whether that's Amazon, Make My Trip, or anyone else for that matter, where we are able to crunch these three or four data sources and give an answer to the customer again within the 4 or 5 seconds that he is at the point of checkout. And the third is really how do you make the repayment of this small
Hmm.
ticket loan seamless and efficient, right? So in certain cases, we do use an online repayment mode like an e-Nudge or a standing instruction that now has become very efficient. but at the same time we kind of provide gateway links. We provide easy access for people to be able to come and repay on the partners platform as well. And so you design everything around a very user friendly experience. And the
Right.
last area that I would say is where technology plays a key role, and again I say this because few people tend to ignore that this is a loan product, is really on the collection side, right? Doing small ticket collections in India is not easy, and doing it in a technology efficient manner, we have been able to build our own in house collection stack that uses feedback loops, that uses a lot of data on customer calls to be able to track and collect money back from people who typically tend not to pay you, right? So
Yeah.
I think these four elements of the entire stack on the technology side make this a very compelling product, both from a customer experience point of view, but also from a lending product point of view, where they're able to manage and improve risk on an ongoing basis.
Gaurav, you must have also seen an increase in volumes for your BNPL products as BNPL became more popular in India. I'm curious if you saw this particularly in the last year during the pandemic and if you faced any challenges in scaling to meet this demand.
So before COVID wave
Hmm.
one started, we had about a less than half a million customers on our BNPL product. Today we have a little over 2.5 million, so have acquired almost 2 million customers over the last, I would say, 15 to 17 months,
Hmm.
and are adding about 150,000 customers per month, right? So there's been some tremendous scale. We have financed almost about 10 to 12 million purchases, and are doing about 1.5 to 2 million purchases now per month. And from a technology point of view, we've been able to build this in a manner that we have no challenges in terms of scale, right? Because
Right.
if you're unable to deliver the checkout experience, you not only have a very dissatisfied customer, but you have a dissatisfied merchant as well, right? Because you've lost revenue for them. And so delivering the technology stack becomes very critical. And our partners also track us and have very high SLAs for to deliver this platform and deliver this technology stack to them. For example, we need responses in under 300 milliseconds. We have a
Yeah.
payment success rate of 99.6%, which is the highest in the industry of any payment product that is out there in the market. And if you breach these SLAs, the partners, like I said, they will obviously not want to work with you. So I think
Yeah.
this is in some ways almost has become table stakes. If you cannot maintain this technology platform in terms of the delivery that is needed, you will have dissatisfied partners ultimately.
Gaurav, I also noticed that across your partner and merchant network, you offer both no cost and low cost EMI options for your BNPL products. So, wanted to get your take on how the revenue model differs for both these options and what's the typical kind of revenue model that you would see for these kind of options on a BNPL product.
Yeah, so about 70% of our transactions on BNPL are no cost for the customer. So as you can imagine, that's zero interest cost for the
Right.
consumer. In those cases, the cost of the interest is borne by the merchant, where the merchant says to the customer that, we will let you make this purchase either in one installment, 3 or 6, 9 months installment, interest free, because
Yeah.
what the merchant typically sees is a higher order value and a more stickiness from the customer to return to the platform again and again. And so in those cases, the merchant bears the fee. In cases where the balance 30% is where the customer bears the fee, because like I said, they like the fact that they can break up a larger purchase into EMIs and amortize it over the course of almost 9 to 12 months.
Yeah.
And there the customer bears the interest. Now depending upon the type of customer, the type of merchant, the interest rate varies from about 20 to 26%.
So, Gaurav, one point you clearly made is one impact of the pandemic has been that it has increased the number of people opting for BNPL or opting for credit. Now, I also want to understand, because you have this deep insight into what customers are purchasing. So, what has been the impact of pandemic on one, their purchase behavior, and second, even the collection part? As you said, it's a business of lending, and collection is the most important part of lending. So, how has been the impact of pandemic on both?
Yeah, that's very interesting. So, three areas where we have seen the pandemic really, grow this product. One is, like I had mentioned, in just customer growth and acquisition. We have added about 150,000 customers per month continuously for the last 15 months. The second is in terms of the types of purchases that we've seen customers make, right? So earlier we used to see order values of a few thousand, let's say about 5 to 6 thousand rupees. During the pandemic, that fell to almost about 2 to 3 thousand rupees. But at the same time, we saw customers actually using our line almost 20 to 30 times in a year, which pre-pandemic was probably about 10 to 15. So people actually got addicted in some ways to using this product because of its convenience during the pandemic, and almost doubled the number of transactions that they would do in a quarterly or a half yearly basis using this product. The third area I would see is typically the average order values, like I said, had fallen, but at the same time the cancellation rates also kind of fell, right? So in e-commerce people typically buy and sometimes they cancel, but when we see our product compared to pre-pandemic, the level of cancellation has also kind of reduced, which obviously helps from a cash flow and from a lender's planning basis. But I would think the most interesting thing that we have seen, to your point on collections and NPAs, is we have seen a drastic reduction in our NPAs through the pandemic because of repeat behavior, because of our enhanced collection capabilities, because of smaller ticket sizes. We have actually seen our NPAs go from about 6 to 7% pre-pandemic to today it's almost sub 1%.
And Gaurav, there you made a very interesting point, and I would like to focus on that. You said in some way people have got used to, I would not say use the word addicted, but there
Yeah.
is this school of thought that exists in the market today that a BNPL product, and the way you describe is that moving from I want to I have. That's how you describe your own BNPL product. Is a take that it is promoting instant gratification and maybe negative financial behavior primarily in the teenagers or people who have not become completely financial literate. So, what's your point of view on that?
Yeah, I don't think so, and I'll tell you why. So, firstly, as a lender, we have to be very responsible in terms of who we lend, right? So, today we decline about 30% of the people who apply for this loan because we feel that A, they do not have the right income levels to support a loan. We feel that their past repayment or bureau track records are such that they should not be given any further leverage. And three, we ensure that it is given not to any teenagers. We do have age cutoffs of about 23 onwards. So we don't really encourage people who are typically, when you're 23, you typically have a job. So we don't really encourage students and definitely not teenagers to be able to come and apply for the credit. But the most important thing is the way we underwrite, right? We like I said, a big tool in our underwriting methodology is we are able to predict through proprietary data sources what the income of the customer is. And so our line size is a function of what that income is. So if your income is, for example, 50,000 rupees, we will never give you a line more than 10,000 rupees per month, right? So we make sure that that net disposable income actually promotes responsible credit from our end. And that's really how we ensure that this is not just a sustainable product for the company, but very equally important, a very sustainable product for the customer. Because in many instances, we are actually the first credit product that a lot of these customers will take. And in that sense, we help them build their credit profile. And over time, they can actually get larger and cheaper loans from banks as well.
Now, let's move on, Gaurav, to a bit of the regulatory side of the story. Now, the thing is, while researching this space, and we have done few episodes now on this space, we understood that there are two regulatory frameworks that people are operating in. There are players like yours who hold an NBFC license and operating under that license. But then there are few players who are maybe do not have NBFC license or even have not partnered with an NBFC. So, what's your practitioner's view about it?
Yeah, so I'll be candid about this, right? I think whichever way you look at BNPL, it is a loan. You are offering credit, right? And whether you are an NBFC or not, or you're just any other private limited company, it is very clear by the rules of the land that credit needs to follow certain regulatory procedures laid out by the central bank. And that obviously is KYC, reporting to the bureau, fair practice code to show the customer what is the loan amount, how long they are taking the loan for, etc., etc., right? Now, yes, we do know that people typically sometimes tend to take shortcuts in the name of user experience, but we feel that's a very short sighted approach. And at some point in time, that's going to receive the wrath of the regulator because you are still providing a loan and you're trying to do it in a manner that is not as per guidelines laid out by the RBI. So we are very clear. We are an NBFC. We partner with banks on the back end. And just by the fact that we are regulated, but also because the partners that we have. And we believe that it is the right model to be able to check all the boxes that the RBI has set out when it comes to giving a loan. So like I said, we make sure we have a KYC for every customer before the loan is given. We make sure there is a loan agreement with terms and conditions that is laid out upfront to the customer. We make sure we follow all collection protocols followed by the RBI. We collect information from the credit bureaus and also report that information back into the credit bureau, because we believe that that is not only a regulatory requirement, that also helps the customer, like I said, build out a credit history. So I am very clear that BNPL is a lending product and has to be followed accordingly to what the regulatory laws are in the country.
Gaurav, when you look at the global market, it is very clear that with the blockbuster IPO of Affirm early this year, the BNPL market is extremely hot and the future looks extremely bright as far as global market is concerned. Purely from the Indian BNPL market, what's your view on how this is going to perform, where it is moving? Your view of the market.
See, BNPL is probably a new concept in the US in some ways, because they don't really have a lot of credit card EMIs. They don't necessarily. I don't think they've ever had a company like a Bajaj Finance, right? Let's face it. What Bajaj Finance has done is nothing but BNPL, right? We all do BNPL. It is what Bajaj Finance has done for many years. We do it in an online manner. They do it in an offline manner. So the person in the Chroma stores of Bajaj that you will see, our equivalent is the SDK into the Amazon app or into a Make My Trip app, right? It is the same thing, but the method of delivery is different. I mean, it's always old wine in a new bottle, right? So, like I said, it's more technologically efficient. It's the user experience is far better, and the capex is much lower because I don't have to place a person in the store. But let's face it, Bajaj has been a pioneer in this model for many years, and they've done it very well. They do it well offline, and I think we have adopted a new online model and online approach to it. So I think from that sense, BNPL is a new word for something that's been around in India for long. But the interesting delivery models by doing it online, underwriting at the point of checkout in a low OPEX manner is something that is tremendously scalable. And I think you will start to see about 3 or 4 companies in India that will really achieve this scale over the next 3 to 5 years. And I definitely see at least a few of us being able to list on the markets relatively soon in the next 3 to 5 year horizon, because credit is still very underpenetrated in India. And one big difference is, while the US still offers BNPL to credit carded customers, I think BNPL in India will actually leapfrog credit cards, because, as you know, we barely have about 30 million credit cards in India for about 100 million shoppers, and so we will actually use BNPL to leapfrog the credit card world and make credit more accessible to folks who typically have had a hard time accessing credit.
Brilliant, Gaurav. If our listeners wanted to know more about your BNPL product or capital float, what's the best way to do this, Gaurav?
I think the best way is obviously just to go to our partner platforms and try out the product. Yeah, go to Amazon, try out Amazon Pay Later, go to Make My Trip, try out Make My Trip Money, go to a boat, you'll see our brand Walnut 369. So we've got a lot of YouTube videos on how the product works. We've written a bunch of blog articles as well that can be found easily online. So I think there are various resources for the listeners to understand the product. But I genuinely feel the best way is to go out there, use the product. It is so easy, and then write to us and give us feedback. We'd love to hear customer feedback always.
Excellent, excellent. So I'll include some of those details in the show notes so people can easily reference it.
Sure.
Thanks a ton, Gaurav, for taking the time to speak with us on BNPL.
Pleasure, guys. It's been a pleasure chatting with you.
That's it from India Fintech Diaries for this week. Do log on to our website, indiafintechdiaries.com, for exclusive content. Additionally, we have also started a new Substack newsletter, and our very first newsletter will be out this week. If you haven't yet subscribed, we would highly urge you to do so to get regular updates from us on what's happening in the fintech space. So until next time, stay safe.